2020 was already a crazy year, but 2021 might just be a contender to be another extremely volatile year. In the year following the pandemic, we've seen tremendous volatility and many talks of a huge upcoming crash. In fact, it's quite reasonable to think that such an occurrence may happen. We've seen excessive pumping of stimulus money into the economy, despite the fact that the economy is already rebounding. Furthermore, many of us have seen what the Fed claims to be transitory inflation that is occurring in our daily lives, with consumer prices reaching new highs. And more recently, the crypto market took a brisk turn downwards. This has allowed market crash spokesmen to enter the spotlight and reach new popularity. Many of you have seen one man who seems to have come out of the shadows and risen to popularity, Harry Dent. If you haven't heard of Dent before, if you take a quick YouTube search, you can see the amount of attention that he has been getting. Dent's fame first began when he was credited for predicting both the dot-com and housing bubble. To give a bit of background information about him, Harry Dent started his own firm named Dent Research after graduating with an MBA at Harvard University. Additionally, he has written plenty of books, and even had one of his books appear on the New York best-selling list. He constantly makes bold predictions about the economy, including the next Great Depression. In this video, I'll cover the awful and also hilarious predictions from Harry Dent and why it's ridiculous that someone like him is gaining credibility. If you're new to the channel, please consider subscribing for more content like this, and let's get right into it. A broken clock is right twice a day. If a broken clock reaches 3 o'clock within a day, there will be enough time that passes to the point where it will indeed be 3 o'clock 2 times. In an extremely similar fashion, Harry Dent is like a broken clock. The economy always has cyclical movements, and by predicting that the market will go a certain direction constantly, a broken clock will eventually read the correct time. For example, take a look at this video Harry Dent put out, back when his opinion did not garner much attention. This so-called expert does not predict a crash every decade. Instead, just like a broken clock, he predicts a market crash every month. Where is the 2014 Great Crash? In 2015, Harry then went on to say that the crash he's been predicting is finally happening.
Hi, it's Harry Dent with a market update in mid-January of 2015. So we're coming into this new year, something we have been predicting very uniquely for years now is clearly happening, and it looks like part of the trigger for the next global financial crisis. Obviously, we've been warning people for years that demographics only get weaker, especially for Germany and Southern Europe.
So the market moved downwards by a slight amount, and Harry was already prematurely calling it the next 2008 recession, but worse. Even he was admitting himself that he's been predicting a crash for years. Harry, if you're watching this, where is the 2010, 2011, 2012, 2013, 2014, or 2015 Great Crash? In fact, he's been wrong a lot more than he's been right. Let's take a look at his books that detail the number of times he's been wrong. Published in 2010, The Great Depression Ahead, How to Prosper in the Debt Crisis of 2010 to 2012. In the next year, The Great Crash Ahead, Strategies for a World Turned Upside Down. 2014, The Demographic Cliff, How to Survive and Prosper During the Great Deflation of 2014 to 2019. Wow, that's a pretty big range you got there, Harry. 5 years, and you're still wrong. In 2015, What to Do When the Bubble Pops, Personal and Business Strategies for the Coming Economic Winter. The Sale of a Lifetime, How the Great Bubble Burst of 2017 to 2019 Can Make You Rich, written in 2016. In 2017, 0 Hour, Turn the greatest political and financial upheaval in modern history to your advantage. In early 2021, Dent predicted a 40% crash that would quote-unquote come in April 2021.
So basically what I'm hearing from you is no sector gets saved come April. But
except for the highest quality bond, the best safe haven. You can go to cash and preserve while everything goes down. That's good.
So here we have a man, Harry Dent, who predicted that a 40% crash would come in April 2021. Where is that crash? In April 2021, the S&P 500 rose 4%. Yet, the more important question that I have to ask Harry is, if you want people to listen to you, then what are your portfolio returns so far?
So right now, you're in 30-year treasury bonds and cash.
Right.
That's your prime. That's where your portfolio is right now.
Well, yes, that's right. And also, I think, and this is where risk tolerance come in, people can just simply unlevered short stocks, just short the S&P 500, short, you buy, I think it's PQQQ, and you can be just simple one-time short the NASDAQ. that is going to go down. You can do that 10, 20, 30% of your portfolio. I wouldn't do it 100%.
Assuming that Harry does what he says, his returns are worse than a 2-year-old clicking random buttons. If we assume that 30% of Harry's portfolio has been shorting the S&P 500 since 2010, and the rest was in cash or low interest treasury bonds that return practically nothing, then his portfolio would be down 90% right now. Harry has said that if the market didn't crash in April of 2021, then we should stop listening to him. Now that the April 2021 crash hasn't occurred, he's still making more predictions. Should we stop listening to him? Clearly he doesn't think so. He's now predicting a 90% market crash coming as early as June of this year.
If we have a significant break, this will be as big a first crash. Now, this is not unusual if you look at major bubbles. The first crash in the 1929 peak, even though it went down to 89% in the end, was 49% in 2.3 months.
The stock market is constantly moving day by day, with news in various parts of the economy having changing influences on prices. Yet, this is caused by people who, as we know, are not two-dimensional chess pieces. And as we all know, the market is fundamentally forward-looking. The market is the result of many people's reactions to what they think will happen in the future, and this is based on what their current perspectives are. If people think the market will go down, they will react accordingly, and the same will occur if they think the market is going to go up. For example, we are currently seeing investors anticipate and react to the Fed's influence on interest rates and form differing opinions on what this will all do. However, since we are not mere chess pieces, we have to go even further than that. People's reactions factor in what they believe how all the other investors will react in the market based on what is currently happening, which is basically a reaction to another reaction that is already reacting to a market that is rapidly changing as time passes by. Basically, if one tries to time the market, they need to both factor in all these details and also do so all correctly. And given how many in the past have correctly and effectively timed the market, the description I just laid out makes it seem easier than it looks. As famous investor Peter Lynch once said, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. Harry Dent is a prime example of this. Timing the market means that you also have to know what other investors are doing as well, which is literally out of your control. In addition, bubbles have to occur when people least expect them. When everyone thinks a severe market crash is coming, that is likely when a crash is not going to happen. So given this, it's completely safe to say that Harry Dent is one of the biggest jokes in the investing space today. Even in the event where he was known for quote-unquote predicting the crash of 08, he had to publish the same exact book twice, one in 2004 and another in 2006, and changed the period where he thought a crash was going to happen. When we see someone like Michael Burry predicting a crash, it makes sense to take a look at what is going on, because he only predicts a market crash once every decade. Not only that, but Burry has investment returns to show that his short-term predictions have actually been correct before. On the other hand, when someone like Harry Dent predicts a crash, it's simply just another monthly rant from a broken clock. If you see someone using Harry Dent as evidence, please send them this video immediately. Now you might be wondering how to go about investing if you aren't supposed to be listening to people like Harry Dent. Personally, with my investments in the current sentiment, I'm going to keep my portfolio diversified in different asset classes to prepare for the unprecedented economic movements going forward. However, keep in mind that I'm not a financial advisor and you should always do your own due diligence. It's especially telling if all-time great investors admit they cannot time and do not even attempt to time the short-term movements of the market. And as a long-term investor, I will adjust to market movements accordingly and ultimately go long on the stock market. Thank you for watching as always. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.